Muzhi Li, Senior Analyst at Arete Research, joins us on the line from Hong Kong to give us the insight from China of Alibaba's listing-breaking global, or rather, Alibaba's global record being breaking listing. 25 billion is the money that has now been raised, Muzhi. From the perspective of you guys sitting in Hong Kong, it's a champion from your area going into the US markets. Was the reaction of American investors expected?
Well, thanks for having me. Well, I think the deal definitely signals a milestone for the Chinese internet stock, but also I think there's something significant about this. Is about 3-4 years ago, it was the Chinese agricultural bank that actually breaks the IPO record of the global IPO record. And now it is, instead of being a state-owned enterprise backed by the government resources, now we see a technology company funded by self-made entrepreneurs that make breaking such records. So I think this really signals the economic growth in China has been driven by the consumer economics, by the private enterprise, and hopefully will continue to be driven by the entrepreneurism rather than the crony capitalism, natural resource, or the real estate tycoon. So I think this is a rather healthy trend.
Indeed. From a South African perspective, of course, we are very interested in what happens with Alibaba because of the relationship between Naspers and Tencent. Has there been much reaction from investors to this listing success on the Tencent share price?
Well, I'm glad you brought it up. I think comparing Tencent with Alibaba, I think there's I think their business model is rather different. And Tencent is mainly a social networking company, growing very big in both PC and mobile internet. Alibaba basically the dominant online shopping, especially the online marketplace segment in China. So they are not really the same market, but increasingly we saw the two companies have been penetrating into each other's territories and fueled some tough competition between the two companies. And also when I'm looking back into these two companies' histories, Alibaba has been funded by foreign investors like Yahoo and SoftBank. Tencent has been funded by funded by South Africa's Naspers. I think it is these two companies has a great history from building from the synergies with working with their investors in the past, and I think that the two companies will continue to drive innovations and hopefully bring up shareholder values in the future.
What about the valuations of both Alibaba and Tencent? And I take the point that they have different business models, but they're both driven by highly successful entrepreneurs. Are the valuations now reaching a level that is concerning you?
Yes, they do. I think Alibaba's IPO price at about $68 a share, that was a fairly valued for the company. Based on my estimate, it's about 27 times of this fiscal year's PE and 22 times the next year's PE. So I think that is basically trading about like a 10% discount from the next 3 years CAGR growth. Now the stock price has been trading roughly 35% above the IPO price, and I think that reflects first the investors' optimism of the company and the proxy of a Chinese consumer economy, and as well as a very strong demand. So now the stock price has been trading roughly like nearly 40 times of PE. I think that is roughly in frothy zones, and I would stay away from the stock and wait for a better entry point.
Mm-hmm. You mentioned at the outset of this interview that you are celebrating Alibaba because it is an entrepreneurial story rather than a crony capitalist story. Are you,
Yeah, that's
who's
correct.
in the next wave? Who's the next, can you give us some companies or stocks to watch coming out of China, also entrepreneurially driven, that are starting to appeal?
Well, there, Xiaomi mobile phone could be another candidate. The Xiaomi phone has been shipping like 60 million handsets in China, growing by roughly like 200 to 300% year over year. I think this represents the not only internet but also the connection between the Internet of Things, because they produce not only the Android-based Xiaomi phone but also TVs and TV boxes, routers, etc., to connect home devices all together. And so I think this could be a big candidate in the future.
Muzhi Li is Senior Analyst at Arete Research.